Good morning. Happy Thursday. Welcome to today's episode of Morning Wealth. 3 things that we can look to here. Central bank decisions that we are looking forward to. OPEC's bearish outlook and a bolt from Bolton. This news completely woke me up. Donald Trump asked Xi Jinping to help him win the re-election by buying a lot of US agricultural products, is what John Bolton says in his new book. The president was quote-unquote pleading with Xi to ensure that he'd win, is what the New York Times quotes from the book. I mean, I'm not shocked nor surprised, but nonetheless, it completely woke me up. The US stocks stumbled Wednesday in a choppy trading session as investors weighed a rise in coronavirus infections against the signs that economy is recovering. The Dow and the S&P swung between gains and losses for much of the day before their declines accelerated heading into the closing bell. Both indexes snapped a 3-day winning streak. Meanwhile, the Nasdaq Composite extended its winning streak to a 4th day thanks to a rally in the technology stocks. The dollar was mixed against the G10 peers, advancing against the euro and the pound, but retreating versus the yen and Swiss franc. Treasuries edged higher with the 10-year yields down by about 2 basis points. Oil dipped and gold was flat. Nikkei and Hang Seng futures are pointing to a lower opening. Meanwhile, Jerome Powell urged lawmakers to maintain the fiscal stimulus, putting his thumb on a debate whether to extend temporary aid programs. It would be a concern if Congress were to pull back from the support that it's providing too quickly, the Fed chief told the House Financial Services Committee. The economy is just now beginning to recover. He predicted that the strong job creation between now and the end of July, and said that this week's record retail sales data bodes well in the overall economic recovery. He also mentioned that the central bank will favor direct corporate bond purchases and move away from corporate bond ETFs. OPEC presented a bearish outlook, saying fuel demand will remain under pressure in the second half. A gradual recovery in the global economy won't compensate for the slump that we have seen in the first half. Today is Thursday and Jobless Claims Day. Jobless claims should continue the downward trend in the June employment survey week as the reopening the economy brings people back to work. New jobless claims probably continued their downward trend. The economists are predicting a drop of 1.29 million from a 1.54 million the prior week. Continuing claims may also tick down to 19.9 million from a 20.9 million. On the equity side, US Steel said profit will deteriorate further this quarter on slumping demand from the automotive and the energy industries. Hertz suspended plans to raise cash by selling new shares that the bankrupt car company described as potentially worthless after its proposal failed to muster with the regulators, so SEC put it down. Air France plans to offer about 8,300 employees incentives to leave their jobs. That's about 17% of their staff. On the fixed income side, Italy is close to approving a 6.3 billion euro credit facility for Fiat Chrysler. The carmaker said that they will use the funds for workers' salaries, paying suppliers, and investments in Italian facilities. Bain Capital Credit closed a new distressed debt and special situations fund with more than 3.2 billion in commitments, according to one of the firm's heads. About 50% of that total has been invested and committed, with the majority deployed in the last 3 months. On the Forex side, there is still a very high level of anxiety in the financial markets, and that is shown by the moves in the currencies. So high beta currencies such as the euro, sterling and the Canadian dollar sold off, while the Swiss franc and Japanese yen, which is more of a risk aversion kind of currencies, held steady. US data in the meantime was mildly disappointing, with housing starts and building permits rebounding less than expected in the month of May. Next 24 hours will be pretty busy because we have the Bank of England monetary policy announcement, the New Zealand GDP, and also the Australian labour market numbers, which is scheduled for release. BOE is expected to expend more of its ammo by boosting bond purchases by a further £100 billion. The key rate will probably be held steady at 0.1, though some economists are seeing a cut to 0 this year and even a negative rate at some stage. Lastly, the Swiss National Bank's policy announcement is also on the calendar, but no changes are expected from that front. That is your market update. Stay safe and healthy, everyone. Thank you very much.